While you're reading this disclaimer, don't forget to subscribe, tap that like button, and check to make sure your shoes are tied. Don't want you tripping, right? Hey, trading family, finally, we're going to start transitioning from just the terminology and concepts over to like exactly how I'm trading. And again, I'll go over this a little bit more in this video, but pretty much all of this unit has been around concepts and terminology, and it's time to move into not just the futures basics, but the trading basics training. So this is going to be kind of an intro to the next series, the next free course that you'll be going through. If you're a total beginner, this is going to be perfect for you. So jumping right in, or before we jump in, if you're watching this on YouTube, please click the link in the description, access our free members area, so you'll not only get access to these slides that you're about to watch, but if there's any PDFs, any guides, any checklists, any other resources that I give away for free, it's all back there. You'll also get notifications on the free live trainings I do, so you can look over my shoulder as I trade live. So that being said, 3 steps to trade like a king. Now, again, that's kind of corny, but hey, that's the brand, King Capital Trading, right? So the first step is this course that you're going through, Futures 101, Futures Basics. So again, why futures? What are futures? All the basic terminology of the videos that you've probably already gone through if you're watching this one. The next series is going to be, again, Trading 101. This is, again, basic trading terminology, concepts, and the strategies behind what I do. And all of this leads into something called the B.I.T method. This is a 3-part method describing why and how I place trades in the futures market, when I enter, what my stop loss is, what my risk management is, when am I looking to get out of a trade. All of that is all included in the B.I.T method. And I will be going over that in a little bit more detail after this slide with a specific example, but this is the quick overview of that. So B in B.I.T, and by the way, this has nothing to do with Bitcoin or crypto or anything like that. This technically can be used in any type of trading. Again, I'm doing futures specifically, but the B stands for order blocks. Blocks of orders where, again, the big institutions are trading. So 97% of retail traders lose money trading. Instead, trade along with the institutions, banks, hedge funds, etc. in mind. You're going to trade with where are they placing their orders? Where are they placing their buys or sells, right? And then when you are able to determine that, you're able to instead trade alongside them as opposed to against them and lose money like most traders. The next thing in the B.I.T method is I for indicator. There's proprietary premium indicators that give you an edge in the markets. They'll let you know which type of trade you should be looking for, again, a long or a short, and when that buy and sell momentum has changed. So again, a lot of people are like, oh, the trade is slowing down, I should get in now. Not necessarily. Oh, this is starting to speed up. There's a lot of momentum heading in this buy direction. The price keeps going up. I need to get in. Well, what does the indicator say? Some people, they get in way too late on a trade, and they get stopped out very quickly, and it's easy to get faked out. So what does the indicator actually say? So I go over that in the next course. And then T for trends. So B.I.T is blocks, indicators, and trends. T for trends, it's another lens to look at your trades through. So using trends allows you to swim with the stream instead of against it. You always want to go with the momentum instead of against it. It's just, again, allows things to be that much better, that much cleaner and easier and simpler. And again, it's another confluence. And what I mean by confluence is if I'm looking at these 3 things as a list, or maybe I should describe it as like a Venn diagram. You've got 3 circles that kind of overlap with each other. When you have 2 of these things overlap, that's a pretty good indication that you should take a trade. If all 3 of them are overlapping, that is your like A+++ amazing trade setup, where not only is it the greatest chance to actually have a profit on that, it could be a maximum type profit situation instead of just a 1-to-1, risking 1 to earn 1, or a 1-to-3, which you can do really independently with any of these 3 methods, with only using the one of the 3 methods and not a combination. But when you have the combination of them, I've been able to get, instead of 1-to-1 or 1-to-3, 1-to-5, 1-to-8, 1-to-12. I've seen some crazy markets 1-to-20s, which is, again, very rare, but that's insane. That's insane. If you're risking 1% of your account to make 20% in one trade is absolutely insane. Again, no guarantee of that. Again, that's a rarity. That's nothing that you want to be hitting on or attempting to hit on a daily basis. But that's the stuff that can happen when you're in the right place, right time, and you have the right method, the B.I.T method. So before I go any further, how about we go over a quick example of this? Cool. So here we are. I'm going to just go back and I'm going to click on replay for today's. And you can see here I got a plus 5.5, plus 5.7, another plus 5. This one was only a 0.8 because I got stopped out. I had moved my stop loss right here above where this this little pullback was and whatever. But long story short, I'm going to share with you exactly what this is and the whole thought process behind it. And again, you're seeing indicators on here. You're seeing these yellow lines. You're seeing this red block and this yellow block. So I'm going to explain what these things are. I'm just going to kind of rewind the trading day here. I'll rewind it to about here. So the first thing that I'll talk about are these big blocks right here, this big red one and this big yellow one. This is a 4-hour order block, and this is a 15-minute order block. Depending upon the time frame, the bigger or longer the order block is, the more weight that order block has, meaning think of them as magnets. The price is going to be driven towards a magnet, but when it gets close, many times it'll actually, you can probably see here by my yellow lines, it'll actually repel against that magnet. So, and you can see I drew this yellow line up, and I'll describe that in a second. The next thing is trends. So if I'm sorry, indicators. So I did the B for blocks, the red block and the yellow block down here. And then I is indicators. Right now, there was some downward momentum. If I actually go to the 1 minute here, we're seeing a lot of up and down and up and down and up and down momentum. This is called the chop. I hate trading during this, but this is literally like right after the open. You know, the open was at 9:30. The price came down, retested the bottom of here, and is now started to look like it's testing back up. So it actually, this low didn't go lower than this one, and this low did not go lower than this one. So I'm looking for some kind of a reversal, like a ping pong testing the top of this price here, came down, top of this price, kind of bouncing back and forth. It tested high. The market opened and it shot back down to retest the prices down here, and now it's shooting back up. Again, ping pong, a tennis ball, going back and forth between two players, right? So now we've come up. We've actually not been able to hit this kind of medium, like what I call like a 1 minute order block in here. This price was not hit again, so it came back down, and then it didn't hit here again. So again, 3 times in a row, these lows were higher. There's a low, a higher low. This price is higher than here. This price is higher than here, right? So I'm looking for some upward momentum. So now at this point, could I have potentially gotten in a trade around here? Maybe. But again, I want to see some actual momentum build and some liquidity come in. And I'll describe some of these terms in, again, the next course. So if you're hearing liquidity and you're like, I have no idea what you're talking about, I still don't understand order blocks, let me just hit the play button here and show you kind of what happened. So I saw the price kind of go up, pull back, go up, pull back, go up, pull back. I could have easily gotten into a buy right here, especially once we started getting a new high here. Especially, I mean, here too, but new high prices here. Could have easily taken this one and ridden this up to the order block and done something like this, right? Something like that. I didn't. But I knew that it was probably, if it was heading up, even if I had gotten in the trade around here, I might get a +2 out of it. You know, 1 to 2. Not huge. But now knowing that it was going to come up, come up, come up, come up, come up, it started to slow down right here. And right at this point, this trend right here, this yellow line that I drew, it broke that trend. It started to go down. Now, some people, they just immediately get in. But then the problem is what about the ping pong? The price should be testing, if not this high, at least these lows again, right? So let me again kind of zoom in a little bit here. So I saw the price come down. It broke that trend. Is it going to come all the way back up at least to this price, if not up here? It didn't. And because it didn't even try to come back up in here and immediately went down, as soon as I saw it stop here, I got in. Now, could it have still come back up and reached right about where my stop loss is? Sure. And I could have been a -1. But instead, I entered the trade here. My stop loss is here. I saw it kind of go right by. Now, again, it came back up. This wick means that it started to try and test higher, and it failed immediately. And then here comes the anvil drop of all the people that were trying to do buys, and they had their stop losses in here. Now all that liquidity is going to get taken up. Again, it bounced at the bottom of here. It created a new low, kept in the trade. Come on. Still momentum, still momentum. Started to come back up. Now, I probably had my stop loss right about here at this point, which I probably could have been out right here, but I didn't, right? So it's starting to kind of consolidate again. I could have easily gotten out here, but I was like, first trade of the day, let's see what we can do, right? So again, I let this go. Didn't get taken out, so I might have had my stop loss here. I probably should have gotten taken out here. I don't know why I didn't have my stop loss set a little lower, but again, with all this momentum, we were still making. I guess my thought process is we were still making lower lows. Every time it went to a low, it went to a lower low. This came back up, but didn't break up these highs. Again, could have gotten out right here. Looks like I let it go. Had a nice big drop, and the reason why I actually let it go is I could have set a take profit here. I think I set a stop loss, so when it reversed, yeah. So I was like, this is plenty good. There's a lot of buyers down here and a lot of buyers down here. I want to get out somewhere in this realm before it reverses, and look what it did. It started to come up and reverse. Again, could have had my stop loss here. There's a lot of different things I could have done, but ultimately this is still a really good solid trade. And then I said, okay, what goes down must come up, or what goes up must come down, right? Not all the time, but when I see, again, consolidation, didn't make any newer lows, didn't make a newer low, and now he broke a new high. In right there, some stoppage volume. Started to see this new trend starting to form. Now this could have easily went down and reversed on me, but again, shot all the way back up. And why did I set my take profit to here? Why was I out immediately when the price was there? Well, that's where these tops were. This is where this support or resistance, is. So again, there's a lot of different concepts in here. I don't want this to be too long or too confusing, but just think, if you were risking $100 on this trade, you made $550. On this one, $100 trade, you made $570. Now, if you're risking $1,000 a trade, $5,500, $5,700, pretty good day, right? So again, these are all things that, again, there's no promises of this. There's no guarantees. I can't say that, you're going to get in at the same time or get out at the same time as me, but I want to teach you the thought concepts behind all of this. In other scenarios, other case studies, and just go through again, not just this is the Russell 2000, how did the US 30 or how did the NASDAQ perform today? There's a lot of different angles that we can take on this, and ultimately, I'm just really excited about sharing more information about how all of this works and how you can make, whatever. Again, I don't want to make any income claims or anything like that, but how you can become a much better trader using the B.I.T method. So go ahead, click on the button to go into the next free training course. Specifically, again, trading basics. This is the futures basics course. We'll go into the specifics of trading here in the next video. And if you want to learn the B.I.T method, please click on the link again in the description that directs you to the full B.I.T method course to learn more about that. And if you're looking for like mentoring and things, so you can get some one-on-one help from a coach, whether it's myself or somebody on my team, go ahead. There'll probably be another link somewhere down in the description for some more details on that as well. Without further ado, this has been an amazing course. I loved pouring this value into you. I hope you guys got a lot out of it, and we'll see you in the next one.